profession that teaches all the other professions. In that way, the services of a teacher are invaluable as they help forge the future of a student. But many a times, while taking care of their pupils, teachers end up neglecting the status of their personal finances. With an aim to guide teachers on better planning their finances, L&T Mutual Fund presents Investment Ki Paathshala, partnered by ET Now, where we invite 4 teachers into our studio and have them interact with our experts.
Hello and welcome to a special series. This is L&T Mutual Fund presents Investment Ki Paathshala, partnered by ET Now, a special series where we're meeting people from different walks of life and we're talking to them about personal finance, about how they can manage their money better, how they can secure their financial future and how they can get more bang from their buck. On this special episode, we're meeting a group of teachers. Now, teachers obviously are very important in everyone's lives. They teach us our most important lessons at a young age and well throughout as we get into adult life. But we're here with them to kind of guide them, help them so that they can manage their finances better. And I have 2 very special experts here with me who will be helping us on this journey. First up, we have Vihang Nayak. He's an equity fund manager with L&T Mutual Fund. Hi Vihang, thanks for joining me.
Hi.
And we have Ganesh Shanbag. He's a certified financial planner with SMS Financial Services. Hi Ganesh, thanks so much for being here. Let's go over to the other side and meet our 4 teachers. First up, Arvind sir, if you could tell us a little bit about yourself and what's your question for our experts.
My name is Arvind Sawant. I am teaching maths in KM High School. I have been teaching maths for the last 26 years. And in KM High School, I am teaching maths for the last 14 years. KM High School is a very good school in Kanjurmarg East. It's been running over here for the last 14 years. The students from here always scores more than 95-94% in their SSC. As being a school teacher, I get a vacation that is in April, May, I am free. So I need to go with my family for a vacation, maybe in India or abroad. So I need to ask the panel, how should I invest my money so that for the vacation I will get cash in my hand.
I believe this is a goal, right? A vacation is a goal, just like buying a house is a goal. What we need to do is we need to reverse work the amount of money that you need to fulfill that goal based on the yield that you get from that instrument and the CAGR that you expect from that instrument. So you have certain cash flows right now. You know, if you invest those cash flows periodically, let's say into an equity mutual funds, for example. Equities have given us 15% over the last 30 years. If you invest 10,000 rupees per month, that comes to about 5.2 crores in 30 years, right? Now, if you make about a 5% yield on that, that's 25 lakhs a year. So that's the kind of money that you have at your disposal to take a great vacation, right? So you have to have your goal in mind. You have to then work with a financial advisor. How do you achieve that goal? And select the appropriate investment for that.
As you said, the holiday is important, but we don't plan. We only come to the holiday only in January when we need to go for a holiday in March or April. So if you actually do that calculation and planning way in advance and keep aside a small amount every month, probably you can get your achieve your goal and then liquidate the investments at the end of a year and then take your holiday. I think that is more a structured manner in doing it. Have multiple buckets and use one bucket for just travel.
Let's move on. Sonia, tell us a little bit about yourself and your question for our experts.
My name is Sonia Mithani. I am born and brought up in Mumbai. I did my B.Ed from Bombay Teachers Training College and I've been in the profession of teaching for almost a decade now. My question is that, we've heard about the importance of having term insurance. I would want to know what amount should we, opt for when it comes to term insurance in terms of your liabilities or your income. And I would also want to know how much should, the payment period be. So should you take a long period to pay the premium or should you just finish it off in a short while?
Ganesh, your thoughts on that?
Yeah, I think you need to decide what, rather than decide as to how many times you need to decide what is the term overall insurance requirement that you have.
Okay.
You have to peg that, and that will keep changing over a period of time, but we are not going to get younger. Our ability to earn will go higher, but our body will not stay at that point. So it is advisable to take a larger term insurance policy when we are younger. The premiums are lesser, and then keep paying it consistently rather than pay for a short period. Psychologically, people feel that we should just pay for 5 years, limited paying term. I wouldn't agree with that, because the moment you take a longer policy, your premium is relatively lesser if you take it when you are younger. So it should cover the liabilities that you will have in future, so that in case, God forbid, something goes wrong, the liabilities are taken care of from the insurance policy.
Let's move on. Ashish sir, if you can tell us a little bit about yourself, where you're teaching, what you're teaching, and your question.
Hi, I'm Ashish Singh. I'm working as a biology teacher in HVB Global Academy. I have been teaching biology from the last 15 years at HVB Global Academy, Marine Lines, Marine Drive, Mumbai. For financial expert, I want to know that, because people tell that is it better to buy your own house or better to stay on rent, because we end up paying more interest. And second question I have, that is it right time to invest in property or stocks, and whether it is profitable or feasible to buy rural plots or agricultural plots in the rural areas in the coming market.
I think one, you need to decide on, if you want to live in a flat, one should decide on buying that, because then you are living in that. Buying a second property is actually a wishful thinking. You should have enough resources, first of all, to manage your retirement rather than have a plot meet your retirement goal, because selling a plot or a flat in a place where you don't stay might become very difficult at times. Plus, managing it, if we are not around, can our spouse and children manage it, is another question.
One thought is that people in India especially over the years have been in love with these few of our asset buckets. So it's real estate, definitely, gold is two, and third is fixed deposits. Equity has been, the love has not been so much. I'll be honest, mutual funds has been even less. Now it's picking up. But with time changing, how are you seeing maybe mutual funds evolve and kind of help people meet some goals of theirs?
So in India, if you go by the history, right, gold and real estate are really the own children, and equity has been a stepchild, right, with so much love for equities. See, you need to understand why a asset class generates the return it generates, right? When I'm looking at investing in equities, you put money in equity mutual funds, I put that money into buying companies, and that company puts that money in creating capacities which generate certain returns, right? Now, on an India level basis, we might have a ROE of 12%. You buy companies with ROEs of 15, 20, 25%. So that is the return which your money is generating with that company, right? If you compare that to, for example, buying a plot of land, right? What return is that plot yielding you every year? In India, it's very interesting here. In cities like Mumbai, your rental yields are 1.5% a year, 2% a year, right? So that is the return that asset class can generate over a long period of time, X cycles, right? But we leverage at 9%. Your cost of borrowing is 9%, and buy property at 1.5%, 2%. So that's a negative carry. I completely concur with Ganesh. If you want to live in the house, it's best to own it, because I don't like to change my house every 2 years, and it's too much of an effort. But to buy an investment property is really a negative carry. So we talk about power of compounding. The power of compounding also works in the reverse. So if you have a 15% return on your equity mutual funds, I told you how much money you will make. But if you have a 5% negative return because of the interest rate and the yield, then that also works against you, right? Which is why we see a lot of people doing these things, yet really can't see themselves, achieving their wealth objective.
Okay, moving on with the conversation. Vinay sir, if you could tell us a little bit about yourselves and your question for the experts.
My name is Vinay Gudi. I am assistant professor at Parle Tilak Vidyalaya Association's Mulund College of Commerce. I am associated with this college for last 12 years. I am taking the subjects costing, auditing and taxation, direct as well as indirect, with the falling rate of interest and thanks to medicals, our increased lifestyle and life span. What is the right way to plan for retirement?
It's difficult to understand two things: medical cost after we retire and longevity, and both are quite scary because when we are young we manage everything. So try and start an SIP when you are young and keep trying to increase it as your resources increase, because salary is not stagnant. There will be an input that keeps happening over a period of time. So please increase the SIPs and keep that as an independent retirement bucket. Also see to it that you have a medical insurance for you, your spouse and your parents, because that takes a major hit. God forbid something on a medical count, So that takes away a lot of our resources because that is not planned and we cannot define it, unfortunately. And looking at inflation in medical costs today, probably 20 years from now, it will be quite crazy. So you have to plan for it well in advance.
The one thing that we really don't understand in this entire journey of wealth creation is time. So right now, when you ask me about your retirement, we believe that retirement is almost the last innings of our life. 99% of the best investors' wealth, right, Warren Buffett, Charlie Munger, happened after retirement. We don't realize that, right? So your best is ahead of you.
Sonia, you had another question that you wanted to ask.
Yeah. The other question that I had was that, when we look into long-term investments, what kind of instruments should we invest to make sure that, they're beating the rising inflation?
Given that your profession is teaching, right? It's a stable profession, not really a cyclical profession like fund management. So you have stable cash flows for the rest of your life. I would say in that kind of a profession, you're not taking risks in your career, right? Take risks in your investments. Have higher allocation to equities. Enjoy the power of compounding. You don't have as many liquidity needs right now, maybe like a business guy, right? Your money can stay invested. Put money into equity mutual funds. History has shown us that equity mutual funds have delivered superior returns. In that, if you have slightly higher risk, you could increase your exposure to mid and small cap funds. That also adds if you have a longer term horizon.
Ganesh, one thought I wanted to come to you was on gold. Does it make sense to invest in gold right now? What's the best way to invest in gold?
I think I give it a slight tinge over here, and I would say most women in India love gold.
Right.
Okay, but the younger generation seems to not love gold but love diamonds. But if you already have gold as a part of your ancestral wealth, do you really need to allocate fresh? That's something that we need to rethink. And most families would have ancestral wealth already in the form of physical gold. Now, managing physical gold is difficult, but an ETF might be a better option if one wants to save on a regular basis. But I would yet say let them buy it and use it when they are young, because after a point they will not use it.
Vihang, we've spoken about mutual funds, but there is a lot of confusion about mutual funds for layman investors. Now, one also becomes is that there are so many buckets, so many types of mutual funds. How does one figure out that, okay, I do want to try out mutual funds, I do want to put my money in there, but how do I decide which mutual fund?
Sure, it's an interesting question. There are more than like 50, 60 types of funds that you could have. I believe that getting an advisor, if you don't understand this business, is worth the effort. B, it's not actually that difficult. You just divide your investments between equity and fixed income. Fixed income is more like a bank FD, where you get a single digit kind of returns. Equity over the long term, at least in the past, has delivered superior 15, 16, even 20% returns, right? What are the benefits of both? Fixed income is is less cyclical, right? Although credit in that is also more cyclical now, but fixed income typically tends to be like an equity, like a fixed deposit. Equity is more cyclical, so all of us know that we need to buy at the bottom, sell at the top. But we typically do the reverse, right? So that it goes through its own cycles. But if you live through those cycles, then the returns are superior. So depends on what you want. It's not actually that difficult, but even then, you need an advisor to basically advise you, what to hold, what to buy, when to sell, and the cycles, etc.
Okay, cool. Ganesh, one thought I had is, while you and Vihang have been advising them on how to regularly invest, one thing is, because they are salaried, of course the money comes monthly, so the thought of using SIPs for that. So just if you could shed more light on SIPs and how they can make use of it, and why it could be a good tool.
Yeah. So actually what happens is, all of us get a cash flow or a salary every month, and we have our expenses which go out every month. So to get in a discipline into that, I would request that you start a systematic investment plan that's known as an SIP, where every month you can invest as low as 500 rupees or in multiples thereof, and create multiple buckets. One could be for travel, one could be for your child's education, one for retirement, and then keep contributing it. Start with a small amount, but don't stop there. As your salaries increase, please keep ramping up on it. Try and increase that also, because your salaries are increasing, our expenses also increase, but our savings ability doesn't increase. So I would request that you start increasing those SIPs over a period of time, so that all your buckets are full at those respective times horizon, and it's enough to fulfill your requirements when you need that in future.
Vihang, the one important point, and I've spoken to people earlier, is they say, okay, great, you're telling me to invest in mutual funds. I'll do that. How do I withdraw my money when I need it? Because I've done fixed deposits my whole life. I know how to get my money. Mutual funds is a little, they feel that it might be a little complicated, which it isn't. But your guidance on that.
See, tagging this question to the earlier question, mutual funds are one of the most liquid asset classes, right? You could put in a redemption request and one has to honor it, right? Technically, this is an advantage that an investor has, right? But investors turn that into a disadvantage. You know why? Because let's say if you have a plot of land today, and if you want to sell it, you're not going to be able to sell it tonight. You'll have to hire a broker, you'll have to search for a buyer, and that takes a good 3 to 6 months. By the time you'll change your mind, and the asset will stay, right? Equity mutual funds or fixed income mutual funds don't have that advantage. If you are in a state of mind where you're scared about the economy, about the markets, the first thing you're going to do is call up your advisor and tell him, I want my money back. And that's where you stop your compounding journey. So what started off as an advantage for an asset class actually has happened to be a disadvantage. And we can see that even now, over the last 6 months, if you see the industry level AUMs and inflows, you can see that as the broader markets bottomed out, the inflows into the equity industry mutual funds also bottomed out, meaning that people actually withdrew money right at the bottom and invested right at the top.
I will add to what Vihang said. It's nice to buy a plot, but try and see if we are not there. Can our spouse manage that? And if it is not in a city where you live, see the difficulty that you go through. Whereas a liquid asset like a mutual fund, transmission can happen in 48 hours. So it's so easy, so convenient. You can get your money back in pieces.
Right.
You want a small amount of money, you can withdraw only to the extent you want to buy a car. You just need that much money, you can withdraw that money anytime you want. That money is there in 3 days, which is convenient, right? Whereas selling a tangible asset becomes very difficult, but people don't realize that.
It's like, if you own a house and if you just want like
a bathroom,
25% of the money, you can't sell your bathroom. right? You have to sell the whole house.
Ganesh, you touched on a really important point, and I want you to elaborate a little bit more about this. Is the what happens after we're gone? The importance of estate planning, simple things as doing a will. When is the right time to do it?
I think the day you start earning, create a will. Because that is your asset, that is the size that you own today. It could keep changing as we grow in our life, but that doesn't mean that we don't create a will. You don't need to wait till you're 90 years to create a will, right? I wish we knew when it's going to be switched off. So the faster and the earlier you do it, the better it is. The more streamlining you do with your investments, the better it is. Because we all think we're going to live till 110 years and we'll keep deferring it till doing it tomorrow, and that tomorrow never comes. I think it's better to put a will in place. It's better to have a relook at all your assets and put them in streamline order, thinking that you're going to live only today.
So as we wind down, just final words of advice, Vihang, and then from Ganesh, just your thoughts to our participants and to the TV viewing audience out there.
So teaching is a very noble profession. I have a lot of respect for teachers because they are creating the people of tomorrow. I believe that teachers should put all their energies focusing on the students that they have, and let money managers help them create the wealth goals that they have.
Yeah, I think trying to follow a disciplined approach, as I said, is the best thing, and think long term. Don't think for 1-2 years. The problems will keep happening on a shorter term horizon in the market, but probably a long term view is a far better view to look at.
Fantastic. But thank you so much, Ganesh. Thank you so much, Vihang, for coming on the show. And thank you for coming and sparing your time and coming here. And I hope it's been helpful to you. And also to you who've been watching this, I hope we've been able to guide you and help you so that you can ensure and secure your financial future and build up your portfolio. You've been watching L&T Mutual Fund presents Investment Ki Paathshala, partnered by ET Now. Thank you so much for watching.
I think it was a very interesting session. The questions that were asked were really matured questions. We also discussed quite a few asset classes. I hope it was beneficial for the teachers to really understand the various kind of asset classes and the kind of CAGR that asset classes can generate.
Yeah, it's an interesting thing that you've done here. I think teachers do give us a lot of information, and trying to help them plan their resources and their retirement, I think is a noble cause. I think they're doing a great noble cause, and I think we should do our part.
Actually, I had some confusion with where to invest and how to invest, but the advisors gave a nice tips like whether we should invest in shares or in mutual fund, or should I go for SIP. So I think I got a good tip, that is I should go for SIP rather than going for real estate.
So one very good thing about the session was that I got a clear answer to my question in terms of insurance and what kind of payment scheme I should choose. The other thing I took back is about systematic investment and regular investment that should happen every month. So just like we're systematic about a lot of other things in life, we should also make investment a priority and invest on a regular basis.
Today's session, the key takeaway is that this financial planner, when I asked the question regarding whether to invest in plots or flats, so they have told me that liquidity is more important. So like in mutual fund and stocks, it would be more better, but we should have a house to stay and not to stay on rent.
The key takeaway is like whatever your goals, whether it is any event or you want to plan for some or your retirement, maybe the best advice I could now understand is don't wait for the right product, invest and keep evolving it. So investing is more important than finding the right product.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.